Alright everyone, here we are with ticker symbol INTC, Intel Corp. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And let's jump into this chart. So Intel actually back in March, right, it fell to about $43. So that's the lowest point that we want to keep in mind for the year. And the highest point after that recovery was way up here at about $65 and some change. Well, it quickly after fell at around $61 it was at, and it started to fall, and it hit new lows here of about 47, and then there was another low here of 48. So 47 close to $46 is the next low that I would pay very close attention to if this was to head into a much more bearish trajectory before even worrying about 43, and 48 was already broken through. So we're going to look at this closely, and right now in the short term, one of the most important numbers for the bulls is actually breaking through this resistance up here before all this bearish and leveling off started, which is $55. $55 is where the bulls want to break through to hit newer highs, and right after it leveled off, the highest point was around here at 54, and then it started to fall, and it fell very significantly. Right now we have a very narrow stretch here, so we're going to look at this really closely, and that's why I've talked about these other numbers before getting to our analysis here on what's going on for Monday. But keep in mind those numbers, 55 for the bulls and 48 was broken through. We'll see if this actually gets itself back up, or is it on its way down to the next number, which would be 46 and some change, close to 47. And then also, if it breaks through 47, your next number is 43. The question is, will this recover, or are the bulls losing traction here and the bears are going to continue to tear this one down? I mean, the 50-day moving average is significantly above this, so the bulls have some legwork to do here. They need to load up on stocks to bring this one back up. So the 50-day moving average is 50.79. Super important number. Write that down. As long as we're below it, the bears are in control. The moment we're above it, the bulls are starting to gain traction and control. But before getting up there, the bulls need to break through resistance. Our first resistance level is 48.27. We're currently at 48.16. If they can break through 48.27, it does not mean that the bulls have gained control. This is just an indicator of where this may be heading. They need to turn that into a support to break away and hit newer highs. On the other hand, we have our support level. This is the lowest point reached in this bearish run, and one of the lowest points reached in quite some time. I mean, they got close to it here, and it hasn't been hit since the beginning of August, end of July. So this is the lowest point reached in the last couple of months. Super important number. If it gets broken through, pay very close attention to how quickly this is hitting newer support levels. If it breaks through 47.66, how quickly is it hitting newer lows and pulling further away from the 50-day moving average? I know this is a really narrow stretch, but we need to monitor this one closely to know how it's going to react on Monday and have a sense of direction of where this is going. The bulls need to load up on stocks to break through resistance, and if this breaks through support, I'd pay very close attention to the behavior of this stock and how quickly is it moving to newer lows, and how quickly is it moving away from the 50-day moving average in a downward direction. And also, is it hanging out sideways or hitting a steep slope downwards? Because if it's hanging out sideways, there's a chance for the bulls to reappear as they have right here, because you could see this was a really steep slope of bearish trend, and then here are the bulls trying to reappear. We have to see if the bulls are going to be able to bring this back up, or are the bears actually going to reappear and stop the bulls from coming in that direction and taking this one down. We're going to have to look at this one closely. If you're a first-time viewer and found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you'll watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th, it started to rise. It leveled off. This is the last candlestick of the 5th coming up right now. And we're about to see it here. Yes, this is the last candlestick of the 5th. And it rose up. And all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it. And thank you guys so much for watching, and let's make some money.